Hello, and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today is October 1st, 2025, and we are looking at one of the most talked-about stocks in the world, Apple, ticker symbol Apple. We have an absolutely dramatic situation unfolding, where the overwhelmingly positive news of the last 2 weeks is clashing with a shocking price crash today. In this video, we'll break down the news, analyze what the charts are telling us, and identify the key levels you need to be watching right now. Let's start with the big picture on the daily chart. First, let's cover the news, because the sentiment has been incredibly bullish. Multiple reports from late September highlighted extremely strong early demand for the new iPhone 17 lineup, tracking 10% to 15% ahead of last year's models. This prompted major analyst upgrades, with Wedbush raising their price target to an impressive $310 and JP Morgan boosting theirs to $280. This news, combined with a broader tech rally, fueled a powerful surge in the stock just last week. Apple also scored a major legal victory with a favorable antitrust ruling that preserves its multi-billion-dollar search deal with Google. On the product front, the September launch event unveiled a whole new ecosystem of devices, including the thinnest iPhone ever, the iPhone Air, and new Apple Watches with groundbreaking health features. However, it wasn't all positive. Some initial reports after the iPhone 17 event on September 9th suggested Wall Street was unimpressed with what they saw as incremental upgrades, causing a brief dip in the stock. There have also been lingering concerns about Apple's AI strategy being too quiet compared to its competitors. Furthermore, we learned that Warren Buffett's Berkshire Hathaway trimmed about 20 million shares earlier in the year, which, while minor for their total holding, still raised some eyebrows about valuation. The broader economic picture is also murky, with the government shutdown and mixed signals from the labor market creating uncertainty. So we have a backdrop of fantastic product news clashing with some underlying concerns and a volatile macro environment. Now, let's look at how this played out on the daily chart. Apple has been in a strong long-term uptrend since the major bottom it put in back in April of this year, around $169. The stock saw a massive surge in June, and after consolidating through July and August, it began another leg up in September. This recent rally was directly tied to that positive iPhone 17 news we just discussed. Let's zoom in on that specific period. You can see this huge bullish candle on September 22nd, where the stock exploded from around $248 to over $256 in a single day on massive volume. That move was a direct reaction to the reports of strong iPhone demand and analyst upgrades. The price then consolidated and continued to grind higher, closing yesterday, September 30th, at $254.63, just shy of its all-time high of $260 from last December. Everything looked poised for a breakout to new all-time highs. And then, today happened. As we can see on this daily chart, today's session has been a bloodbath for Apple. The stock gapped down massively on the open, from yesterday's close above $254 all the way down to an open of $229.52. It has since traded down to a low of $223.74, completely erasing the entire rally from the past 2 weeks in a matter of hours. This is a brutal reversal and a huge warning sign for bulls. The news has not yet caught up to this move, and there is no obvious catalyst in the headlines provided for such a catastrophic drop. This creates a dangerous environment where the market knows something that isn't yet public. Crucially, the price has fallen directly into a key support zone, right around the lows from early September and late August, near that $226 level. Let's switch to the hourly chart to get a clearer view of the recent action leading up to this crash. Here we can see the steady climb throughout late September. The price action was orderly, with pullbacks being bought up, indicating strong bullish control. Yesterday's price action showed some minor consolidation near the highs, but gave no indication of the collapse that was to come. The key takeaway from the hourly chart is the sheer size of this gap. We have a massive void in the chart between yesterday's low around $253 and today's high around $229. In technical analysis, Gaps like this are significant and often act as powerful areas of resistance on any bounce attempt. So, let's summarize the current situation and talk about what to look for next. This is a classic battle between fundamentals and technicals, or rather, between yesterday's news and today's brutal price action. Let's recap the key price levels to watch. The most immediate and critical level is the support zone we are currently testing, between $223 and $226. This area represents the lows from the past month, and holding it is absolutely essential for the bulls. If that support breaks, the next major support level isn't until the $210 area. To the upside, the first major hurdle is filling that massive gap. The bottom of the gap is around $253, and the previous all-time high resistance is at $260. Now for some potential scenarios. The bullish case, which I would give a 30% probability, is that this was a panic-driven flush-out on some unknown news that turns out to be a non-issue. If the $223 to $226 support level holds firm, and we see strong buying volume come in, this could present a high-risk, high-reward entry for a sharp bounce. This scenario becomes more likely if the stock can quickly reclaim the $230 level and start moving back towards the gap. The bearish case, which I have to give a 70% probability given the severity of the drop, is that this is the start of a major trend reversal. A catastrophic gap down like this is often not a one-day event. This scenario is reinforced if the stock fails to bounce and starts consolidating below the $226 support level. A break of this support would open the door for a much deeper correction. What should you be looking for? First, watch the news feeds for a reason behind this drop. A surprise earnings warning, a regulatory development, or a major production issue could be culprits. Second, watch price action at this $223 to $226 support zone like a hawk. A strong defense of this level is the only thing bulls have going for them right now. Finally, watch for any attempt to fill the gap. A weak rally that fails around the $235 to $240 level would be another very bearish signal. This is a volatile and dangerous setup, so exercising caution is paramount. That's our analysis of Apple on this very dramatic day. The narrative has completely flipped in 24 hours, and the chart is now at a critical inflection point. Please remember, this is for educational purposes only and is not financial advice. What do you think is causing this crash? Let us know in the comments below. If you found this analysis helpful, please hit that like button, subscribe to explain the charts, and turn on notifications so you don't miss our next update. Thanks for watching and trade safe.